Welcome back to the Only Points podcast, you guys. In today's episode, we're going to be going over the bank's high interest rates, how they got high profits from it. We're going to be going over how the Hollywood and auto strikes have affected travel. And lastly, we're going to talk about how credit card debt in America hits the $1 trillion for the first time in history. All right. So but we get there. Thank you guys for watching this video, listening to our podcast. Please don't forget to subscribe. I know a lot of you guys are not subscribed to us, so don't forget to do that. So right off the bat, we want to go over to the first thing that's going to be affecting us the most, and it's credit card debt. Because of inflation, because of COVID, and people spending money like crazy, because we're printing money like crazy, a lot of Americans for the first time hit $1 trillion. Let me share my screen, you guys. This is crazy. Credit card debt hits $1 trillion for the first time in American history. Here we go. For the first time in American history, people across the country owe more than $1 trillion in credit card debt. Let me make that big screen for you guys. Finance professionals say people's finances are stretched thin due to inflation, high housing costs, and other expenditures that force millions of people to collectively owe more than ever before. Financial educator Thomas, not even going to pronounce the last name, says interest rates on credit cards are getting higher that makes it harder to pay down the debt. New report by Lending Tree says the average credit card interest rate is close to 24.5. Yeah, and this is very true. Credit card debt or interest rate right now is extremely fucking high. One financial educator says that with the struggles of paying for daily expenses and being pushed to limit on credit cards is causing more people to get help. Or Thomas says, by the time they reach out for help, they typically are about $26,000 worth of credit card debt. I think between medical and just general cost of living in the recent and why we're seeing people turn towards credit cards, and then it becomes harder to pay them down as those balances get higher and higher, and the interest rates get higher and higher. Rising rates are speaking debates in Congress. One senator from Mississippi introduced legislation to cap interest rates at 18%. That would be fantastic. So if you need help, creditor councils help people lower interest rates than around 30% to single digits. Understand your budget can cut back, blah, 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 blah. All right. So what do you guys think about this? What do you think cost this, you guys? And then what is the best advice we can give to our listeners to do if they're in this situation?
Yeah,
Well,
I think
first
I'll start
off,
off. Or
okay,
Eddie,
go
you
ahead,
want to
go
go
ahead.
first?
No, you go
Me?
ahead.
Yeah, so I think in our very hot take episode that we did last time, my suggestion was that we should kind of focus on free education, and why that's important is because obviously this is not being taught at schools, right? We're not getting taught how to manage your finances, how to apply for credit cards, what to do with credit cards once you have them, like
How to leverage credit correctly.
How to leverage credit correctly, all of that.
And
Taxes.
can I interject real quick, because that brings me to a very solid point. I was talking to Edgar Cruz, our boy, yesterday, and I asked him a very simple question. What is the purpose to a line of credit? Because what a lot of people don't understand, that credit products are designed for a specific purpose and for a specific use. And you need to show the bank that you understand what that purpose is. So for example, I'm not going to go to a bank and then be like, "Oh, I need to apply for a mortgage." "Oh yeah, sure, awesome. What houses are you looking for?" "Houses? Oh, I'm going to get this $500,000 mortgage and loan and invest it into my company." The fuck? They're gonna be like, "No, then we're not gonna approve you." Even if I have an 850 credit score, even if I have the finances, because I don't understand how to use that credit product, I'm not gonna get approved for it, right? Or if you don't have the need for it. So a lot of people come to me, they come to us, they're like, "Eddie, oh, I want $250,000 in credit." "Okay, cool, awesome. What do you need it for?" "Oh, because I need to buy inventory." "Okay, awesome. So perfect, awesome. Either a working capital loan or a business credit cards." They're like, "No, no, no, I want a line of credit." But A line of credit. Okay, why is that? Oh, it's because I just want cash. Okay, but why?
What are you gonna do with
How
that?
are you gonna like? That's not what a line of credit is used for. So you guys, do you guys know what a line of credit is used for?
The way that I have it understood is that a line of credit, basically, say that you have with I don't know, let's just use Chase for example. You have a $100,000 line of credit. You have that available to your disposal. From my understanding is that you can take it out cash, and of course you need to pay that back, right? So
Yeah,
once you
but
take out, let's say
yeah.
10,000 or whatever you use it for, you start accumulating interest, and you basically need to pay that back. And the good thing about lines of credit is that I know is that you're only going to get charged the interest that you use, not for the entire line of credit. I
Right,
don't
but
know if
like,
you want to like.
what is the like what is the specific thing that they were built to do for? Like for example, well, if you just go buy things for your business, you get a business credit card. Okay, cool.
Right, yeah.
If you know what I'm saying. So
I think it's to leverage credit more properly.
okay, gotcha. So look, very important to understand. What does a line of credit do? The whole purpose a line of credit was created is to cover this major problem in businesses,
Cash
cash
flow.
cash flow.
Yeah.
Okay.
Yep.
So depending on the industry that you're in, depending on the business, there may be a business that has an AR log and an AP log. Do you guys know what that is? Okay.
Nope.
It is accounts receivable and accounts payable.
Payable, yeah.
Oh, okay, then
Okay.
yeah.
So for example, a manufacturing company, let's say I gave this example last time with Edgar, because Edgar didn't understand this either. So let's say you're a manufacturing company and you're Lockheed Martin. You produce $1 billion worth of weaponry to the United States government, right? And you have a contract that $1 billion worth of inventory is going to be get sold to the United States every single month, right? And you have an invoice system. The invoice system allows you to send the invoice. They have to pay the invoice in 30 days. And the government always pays you in 30 days after you send the invoice, right? So let's say, so for example, in order for you to produce the $1 billion worth of inventory, you need to spend, let's say, $1 million, right? $1 million in material. You're gonna spend like buy steel, plastic, leather, iron over here, whatever it may be, right? To be able to build whatever you need to build, right? To produce your goods. Well, as soon as you produce your goods, right, you send an invoice, you spend all the money that you have to be able to produce these goods. You send the invoice, you send the money, and then now you're sitting like a fucking duck in the middle of the water, just waiting for 30 days for you to get money back. In the meantime, you have other business expenses, you have to pay payroll, you have to do all these business expenses. And plus, what if another like you're Lockheed Martin, and then another country comes and, hey, Lockheed Martin, I also need $1 billion monthly contract with you because I also want to buy that inventory from you. Now, while you're waiting for the U.S. government to pay you, let's say the U.K. comes in and like, here you go. I want to start. I want to place an order for $1 billion of this inventory that you have. Well, shit, where are you going to get the money to get to pay for the goods, the material goods that you need to do, right?
Mm-hmm.
Well, you need some sort of credit that gives you access to go be able to do your operational expenses in order for then you to send an invoice, which will be your accounts receivables, right? You're going to send an invoice. It's going to be on your accounts receivables, AR log. And then once you get paid 30 days later, that's going to be accounts payable. Is that correct? You guys understand? So
Yep.
during those 30 days, there's a cash flow problem. And so that's the whole point. So what a line of credit is supposed to do, an underwriter is supposed to look at your finances, at your business structure. They're going to say, like, okay, good. On average, your business is a 30-day payment cycle, right? So we're going to do the line of credits for 30 days, or maybe they'll do a little bit more. They usually won't do, if they see anything that is So if they see anything that is not paid within the 60 days, that means that your business is a high risk. Why? Because it means that it's taking too long for you to get your money to recover your money back. Does that make sense?
Hmm.
So they usually do it within the 30-day mark. And then they're like, okay, how much? Okay, let's say you get one new customer every single month on average, and you have like, okay, you need $1 million per customer that you get. So you need a line of credit for probably $1 million or more. So you can cover those operational expenses while you're waiting for them to pay you in the 30 days, right? So that's what a line of credit was created for. It's to cover cash flow problems from like AR log to AP log. All right. And a lot of people are like, yeah, I just want a line of credit. And we're like, okay, cool. Well, you need a good reason why you want to apply for that. Just like how you can't go and apply for equipment financing and then go and spend it on whatever the hell you want to go spend it on, right? There's a specific use for that product. So so there you go. That's what I need to explain. Go ahead, Alexis.
We went on a bit of a tangent there, but it was good information nonetheless. So, what was I getting at? Free education. So, going back to free education. So, why that was a hot take is that we were talking that free education is important because schools don't really teach personal finances, how to leverage credit, how to even build credit in the first place, taxes, anything finance related. Schools don't really teach you that. So, it's hard these days to know what to do with your finances, budgeting, all of that. So why that's important when it comes to this topic of reaching debt at an all-time high. If we can get the people, to at least be more knowledgeable of what credit is, how to budget properly, what to do with your credit, how to leverage it properly, how to even use that credit to like travel for your own benefits, we can teach people these things and we don't have to like get people in debt. Or even if we can teach them, how to manage your debt, what to do, how to remove things off your credit report, things like that. It all comes down to knowledge. Knowledge is important, and I think if we can get it down to where we're at least aiming to teach more of personal finances, business finances in the universities or high school, even it can even start at middle school. Like
Right.
even when it comes to budgeting, like
Yeah,
for
like
like.
learning just basic finances and understanding, like, again, what credit products are used for, how they're used, and how you're supposed to manage them. Period. Like just basic accounting, like basic finance education. And it's very, very simple, very straight to the point, but no there's no entity or education system that teaches that, unless you want to be like a business degree major or an economist or something like that, which is, again, they're not the only ones who need the most basic information. So yeah, you're absolutely right. This needs to be taught in schools, but thankfully you guys are listening to us and we got you guys. So besides that, I mean, Eddie Mercado, what do you think?
I think it's kind of funny how Alexis said, "Oh, you can start teaching budgeting even in middle school." Throwback. This just rang a bell. I remember when I was in fifth grade. So this is obviously elementary. That the teacher that I had, who is by far one of my most favorite, she's top three for sure. She actually taught us how to manage our money, and the way she did was obviously like whenever we would turn in our papers on time, this and that, we would end up getting like um not monopoly dollars, but like just dollars. It's like I'm not going to say what her last name is, but let's just say her last name is Cortez. We would get Cortez dollars, right? And from there, we would at the like 2 months before the school year ended, um, we ended up getting, or I think the second half. It was more towards like the second half. Yeah, the second half of the year of the school year, again, elementary, we were able to apply for jobs. Uh, and these jobs were just regular things that the teacher would normally do whenever we would do PE, who would take out the balls, whenever we would like a line guider, like instead of having one straight line, we would have two lines, uh this and that, right? And then of course, like the drinking fountain was free, sitting at your desk was free. throughout the school year, except on the second half of the year. On the second half of the year, the teacher did like this bid off to see who wanted to buy the drinking fountain, wanted to do a bid off to see you can buy whichever desk you wanted, because some desks were taller than others, of course. And the craziest thing was that I ended up landing 2 jobs out of the 13 that I applied for. That we actually had applications. Of course, the people that made the most money were the people that went broke by buying as many desks as possible. The person the person that bought the drinking fountain in class would charge $2 just to have a sip of water. And what else could you buy with these dollars? Yes, what else could you buy with these dollars? Candy and dumb shit. Bathroom passes were like $5. I remember this so fucking.
So what did
vividly.
you own? What did you own?
I owned 2 desks.
Gotcha.
I
You
owned 2 desks.
On the water fountains. Yeah.
No, I honestly
own
wish.
the air you guys breathe. Every puff is 30 cents.
Yeah, if not, y'all go to wear a plastic bag around your neck.
Ándale.
No, so anyways, that had to stop because 2 people went off and all they did was buy all the candy and had no desk to sit at. So what do you think happened to these kids?
They bitch and complain.
They had to sit on the ground. And
Yeah.
after approximately like 3 or 4 days, parents came in and said, I don't know why you're having my student, I don't know why you're having my son or my daughter sitting on the ground when every other student has a desk. And it's the teacher started explaining to the parents, like, I'm trying to teach them management skills, this and that. And sure enough, that shit had to stop.
Yeah, because fucking some parents were snowflakes and
Yeah.
they were upset.
More
Yeah.
than that, and their kids grew up to be clowns from the circus too. So it's crazy. So I don't know. I just shared that little story. Truly,
Yeah, I
there's
think
no
it's
age.
super. See, and it also teaches accountability. Like, hey, it is okay to mess up, right? It happens. Yeah, like, for example, those people messed up. They bought a bunch of candy, and then now they didn't have a seat. No, well, next time they save money, they're like, well, fuck. Them sitting them and going through the hard time is gonna teach them accountability. And it's gonna teach them that there's consequences to their actions. And they're like, whoa, shit. Do I want the candy or do I want a seat? Right? Do I want to be able to sit down? Well, shit. I want to sit down, right? So is literally going to prepare them for the future. It's absolutely something that you got to know. And actually, super funny that you mentioned that, because I literally just went to parent teachers conferences right before we recorded this podcast, and that is one of the things I was telling her. Like the reason why we were talking about English and math is because I was telling her, look, at the end of the day, my main priority is for her to learn how to communicate highly efficiently, right? I want her to be able to express herself and know how to argue. So instead of like how to argue efficiently and correctly, so that instead of her argument being those people who cannot express themselves and they just get pissed off and angry and they get violent or just scream because they cannot convey their emotions adequately to persuade somebody else. So that's what I was telling her, that like I want her to focus when my daughter, to be able to do that's what my focus is, and that's what I want her to help me out with. And so yeah, so we got a little plan set up for the meeting, a parent teacher conference, and that is something very vital. And then that also takes in turn into like accountability, finances, right? Yeah, I think this is something very crucial that everybody should be learning. So if you guys have not learned this and you're 25, 26, 35, it doesn't matter. Start now.
No.
Start now. It's very something, and it's a harsh reality. You guys just got to go put on an Excel sheet, everything you owe, the money coming in, and make a balance sheet of your life, right? Make a balance sheet of your life and fix that. All right. Well, moving on to the very next topic is we're going to go a little bit deviate from finances and stuff. We're going to be talking about travel. We got this report not a report, but this news outlet, CNBC. Here we go. Delta says Hollywood auto strikes are denting business travel. So it says the Hollywood strikes and the auto strikes, not Hollywood auto strikes. All right, you guys. So here we go. Let's I guess we can read the key points. Recent strikes by Hollywood talents and auto workers are weighing on business travel demand, Delta Airlines says. And to be honest with you, we've mentioned this in the past 2 podcasts where we feel like Delta Airlines is more like a business class airline. And this is just, again, just it's like we know what we're talking about, isn't it? Isn't that right, Alexis?
Most certainly true.
Yeah, fucking. We're not Capper Airlines, or we're not fucking pork. We don't speak pork out here, bro. So the carrier has outsized exposure to the automotive and entertainment industries. Delta president, fuck man, names. Why? How? Who can read that for me?
Houndstein.
Houndstein, sure, noted that demand for technology and financial services consumer customers posted double-digit growth during the third quarter. So, recent strikes by Hollywood talent and United Auto Workers Union members are drag on business travel demand, which is otherwise recovering. Delta Airlines President Glenn said on Thursday. Delta has an outsized exposure to the automotive and entertainment industries with a more than 70% market share at Detroit Metropolitan Wayne Country Airport and nearly 20% share at Los Angeles International Airport, more than any other carrier, according to airport data. The strikes have had a not insignificant change in the business travel to and from Los Angeles, as well as now the UAW strike, which curtailed a significant amount of business in Detroit. Right? Most auto manufacturers, or the Ford auto manufacturer is in Detroit, Michigan, right? Is that the case?
Correct, yeah.
That's fine. Okay. So we're probably the most impacted by those 2 sectors. That makes sense. The United Auto Workers targeted strikes, which began after major Detroit automakers and union failed to reach labor deals before September contract expiration, are entering their 4th week and escalating. Hollywood writers earlier this week ratified a new 3-year contract after nearly 150 days of work stoppage that suspended significant film and TV production. But Hollywood actors, represented by the Screen Actors Guild, American Federation of Television and Radio Artists, are still on strike and late. So the writers, the people that write the shows, the jokes, and all that stuff, they're Gucci now. But the actual actors now, they're still on strike because I guess they're in the different unions, are still on strike. And late Wednesday, the Alliance of Motion Picture and Television Producers, which represents production studios like Disney, Universal, Netflix, and others, said talks have been suspended, with the 2 sides far apart on a deal. Delta's CEO noted that demand from technology and financial services customers posted double-digit growth in the third quarter, contributing to an overall rebound for business travel. A company survey of corporate customers found that a majority expect their travel to stay the same or increase in the last 3 months of this year and into 2024. Well, maybe for corporate customers for sure, but to be honest with you, a lot of Hollywood travel is going to be happening for Thanksgiving, and especially for New Year's,
3 in general.
and Christmas. So, okay, cool, awesome. So I was not expecting that, because I think, if I remember correctly, there's like a market share on each airport on the industry, I'm guessing. Is that what I read right?
Yeah, I think it was saying 70% market share for the Detroit airport, at least when it comes to Delta Airlines, and 20% for LAX,
Yeah.
also with Delta Airlines.
Right. So I mean, yeah, I mean, makes sense because LA airport, we're talking about actors flying there in and out. We're talking about all that stuff. We also got a lot about auto workers from Ford working in Detroit. So, what do you guys think about this? This is happening to Delta, while at the same time, the CEO also like changed the reward status thing, and now they're pedaling back. What do you think about Delta right now? What is their situation, man? If you guys were the CEO right now of Delta, what would you be doing?
Nothing, chilling, clapping to myself, to be honest, because again, like the hot take that we spoke about last week was just narrowing down to a specific clientele, and they're going to end up keeping only the people that truly want to drive to fly in Delta.
Yeah, but like, I mean, that's the thing. I mean, their clientele is
On strike.
on strike. Yeah. So that makes sense to me. Like it makes sense that they're not getting, because not only is it just like the entrepreneurs who are business, it's not like lawyers and doctors, it's like blue collar workers like these auto manufacturer employees who work for a major corporate company like Ford, who have contracts with Delta of sending people here and there, and they fly Delta because it's more like a business or
Partnership. Yes,
business
correct.
partners, right?
I get
So
it. I get it.
that's
But at
what I'm
the
saying.
end,
Yeah.
so if if this is causing Delta to deviate traffic to other airlines are still going to sell out. And at the end of the day, you're going to left with no choice but to fly with Delta. And then all it takes is one person to say, you know what, flying Delta really wasn't that bad. And then it's going to take another person to say, flying Delta really wasn't that bad. And then it's just going to go back to normal. At the end of the day, you're just bottlenecking your clientele. It doesn't matter. A strike doesn't ever last more than 2 or 3 weeks. It just honestly and truly just doesn't. Everything just becomes super repetitive. There rarely is ever any changes. Uh, Delta, the CEO is doing a very, very good job at keeping his composure. And you know what? I think, to be honest, he's just going to continue to press, whether they're union workers or not. Because I have hotel experience and I've worked for hotels before, I know when corporate businesses, as such, with airlines, uh, I know they have a set price for a ticket, no matter how expensive uh,
Right.
the average ticket is going for. It's a solid price every single time. It's a solid price every single time. It
Correct.
can be 150, even if the flight is 130. They're If they choose to use the code, it's still going to be 150. It doesn't matter. People are still going to fly Delta regardless. Yes,
Absolutely.
their reviews. Yes, their reviews are going down. No, they're getting shit reviews, but they're getting exposure too. A
Yeah,
lot
to
of
be
people
honest
look
with you, it's
for.
such a nice airline. I love flying Delta,
I
but
love Delta, Delta, American, United.
yeah, and that's when they slam me to the ground at United. But besides that, and then I'm pretty sure they're gonna charge you a fee for slamming you into the ground. You know.
Yeah, they got to make it's their form of reparations. If they're losing money somewhere, they're going to any clientele that they do get. They don't lose money. They truly they don't lose money. The only airlines that lost were the ones that went bankrupt during COVID.
Yeah, which ones were they? I mean, like I know Hertz went bankrupt, but that's in the car rental business.
That's car
Which
rental business. I
was it
damn, I did
Delta?
no.
Did
No,
Delta bankrupt?
I remember I had I had booked flights and a hotel in Cancun ready to go. And the airline that I had was actually went bankrupt. Um like 4 or 5 months later, I literally thought I lost all those points, like 56,000 points. Chase points, specifically chase points.
Damn, that sucks. You were
Like
able to recover those?
5 months later, I check my Chase account, I refresh it, and it says like, I don't know, it was like 72,000 points, and I'm like, where did I get these 50x thousand points from? And then I refreshed it again, and then sure enough, it said, oh, because I wasn't gonna call Chase and be like, "Hey, you guys just deposited 50 something thousand points in my account. Was that a mistake?" I ended up doing some background. I was like, "Holy shit! Like, no, I got my points back." Of
There
course,
you
how
go.
did I find out? So I checked my bank account and then I checked my email. So theoretically, I could check my email to find out the name of the airline. But yeah, no, I don't remember it. I do know it was those smaller airlines though. Actually, let's check.
Yeah, I'm googling which airlines. Bang. Oh, file or
What can you say? Meanwhile, Alexis.
What can I say meanwhile? So, as you guys probably already know, I'm in the LA area, so I'm pretty fairly well versed when it comes to like the Hollywood strike, the Writers Guild strike. Um, every now and then I do some production sound, so that kind of indirectly affects me. So I have noticed that work is a little bit slow, and when it comes to Delta Airlines and the film industry as a whole, you know, writers, sound, video, camera, actors, etc., all of that combined, the film industry, they tend to need travel a lot, you know, because one, you know, like even though we have Hollywood here, the film industry is huge over here. We're not always filming here, you know. We might have to film over in Colorado or some other state or even out of the country, and usually because of that, um, there's not a lot of local people that know how to do cinematography that well, professional sound that well. So a lot of the times you have to hire people from LA, people that know how to do sound professionally. You have to oftentimes buy their travel, etc. And because of that, you know, they also have equipment, stuff like that. So obviously these film companies, production companies that have to coordinate all of that travel for, keep in mind, it's not just the actors, you know, you have so many employees or so many crew members that you have to like fly out, etc. So it's a big deal, you know,
Yeah,
when the writers guilds have to go on strike and for 5 months, that's a long time, and I can understand the uncertainty with the
frustration.
Delta CEO, you know, because obviously LA, you guys saw that it's a pretty big share for LAX, and yeah,
20%,
I mean I understand it,
70%
but you know
for
at the same
70%.
time you have to you have to take into consideration, you know, like, okay, so what if the writer guild goes on strike, you know, like how can we like circumvent these losses in the meanwhile, you know. So I understand it, but the CEO, you know, has to what do you call it, has to keep in mind these issues, you know, like if they were to occur again in the future, you know.
Absolutely. Awesome, awesome, awesome. And lastly, we want to move to the last topic, but before we do that, you guys remember we do these podcasts for free. We spend hours recording these, editing these for your guys' knowledge and pleasure. So if you guys want to support us, we don't sell anything, we don't run ads, we don't do anything. All we ask is that you guys like this podcast, review it, and or subscribe to our YouTube channel, turn on notifications, and obviously share this with a friend. Okay, put the word out. We truly appreciate you guys. Thank you so much for listening to us and giving us feedback and giving us a platform. So we truly appreciate you guys, and we're gonna keep doing these things for free for you guys. Okay. So last story we got is banks hitting profits, higher profits than expected because of high interest rates. Okay, so let me go share the few articles that we have. We actually have 3 articles for this because it's quite shocking. So here's the thing: Bank of America, Bank of America posts better than expected profit on high interest rates. Can you guys see my screen? Correct.
Yep.
Beautiful. Perfect. So let me make this a little bit key takeaways. Bank of America earnings and revenue exceeded forecasted, boosted by increased interest income because of higher borrowing costs. The bank says higher credit card balances. Again, remember what was our first story? High credit card debt. over $1 trillion. So the bank said high credit card balances lifted average loan and lease balances. Why? Because they're paying more interest on that debt now. Shares of Bank of America have moved off nearly 3-year lows earlier this month, but remained in the negative territory for 2023. Interest hikes by the Federal Reserve bring down inflation help Bank of America post better than expected results, and shares rose over 1% in early trading on Tuesday. Bank of America reported third quarter fiscal 2023 profits jumped from 10% to $7.8 billion, or 0.9 per share. Revenue net of interest expenses increased 2.3% to $25.2 billion. Both were above forecasted. Interest income was up 4.5% to $14.4 billion, which the bank says was driven by higher interest rates and loan growth. Non-interest income added 0.05% to $10.8 billion as higher sales and trading revenue was, as well as asset management fees, offset income declines elsewhere. The bank indicated that average loan and lease balances were $1 trillion and a gain of 1%, lifted by rising credit card balances. Average deposit balances were $1.9 trillion, a gain of $1 billion from second quarter, but a drop off of $87 billion from a year ago. Okay. So CEO of Bank of America added clients across all its businesses, even with a slowing economy and a pullback in consumer spending, right? Because why? Why is customers not spending that much money? Because again, the highest amount of debts in consumer debts. So we're spending less money now because we're almost capped out. And also because of high interest rates, because it's more expensive to borrow money. CFO Alastair Borthwick added the company remained disciplined and decreased expenses from the second consecutive quarter while continuing to invest in our franchise. So earlier this month, shares of Bank of America hit nearly a 3-year low, and although they made some gains since then, they're still down for the year. So again, this is what TradingView looks like. So here we go. Here is Bank of America stock, and starting 2023, yep, we hit an all-time high in November. No. In the beginning of 2022. The beginning of 2022, we hit an all-time high, and then we've just been on a downward trajectory since then. So, with that being said, all right. So that's for Bank of America, and then this is for Chase. Chase profits jumps 35% on interest rate windfall. Right.
Wow.
Right. Yeah. 35% in profits from the third quarter as the biggest US bank continues to reap the benefits from higher interest rates and lower than normal loan losses. The bank said on Friday that net income climbed to $13.2 billion from $9.7 billion a year earlier. And that was better than the $11.9 billion analysts has expected. So they crushed margins for over $1 billion, according to data compiled by Bloomberg. Jamie Dimon, which is the CEO of Chase, said the earnings were solid, but acknowledged that these results benefit from our over-earning on both net interest income and below normal credit costs, with both of which will normalize over time. In a warning about the conflict of Ukraine and Israel, Diamond said this may be the most dangerous time the world has seen in decades. Diamond's views on world affairs are closely followed across Wall Street. JP Morgan share trend and early gain from more than 4% to close 1.5% higher in New York. With the previous quarter, much of the gain was driven by net interest income, which at $22.7 billion was 30% higher than the same quarter a year ago. The figure was ahead of analyst expectations of $22.4 billion as JP Morgan continued to gain from the Federal Reserve cycle of interest rate rises and the bank's emergency acquisition of First Republic. That is true. They also gain a bunch of assets for dollars, cheap for steel. So these are lending profits rise with interest. So yeah, quarter three, way over the $20 billion mark. So JP Morgan's loan losses remain at a low levels. And then, yeah. So, what do you guys think about all this? What do you guys think about all the interest rates and them hitting high record profits here?
So it's definitely screwed because, as we all say in America, if a business makes 10% ROI, it's doing very, very well. They're doing 35%. And I don't see this situation getting any better. If
Right.
this doesn't scare people, that that Chase, the biggest bank in the US, is more profitable than ever. Or actually, am I wrong? I think I'm saying this wrong. They're making 35% more than what they're already making.
Yeah.
for the year.
Yeah. For that quarter. For the quarter. No,
Oh,
no.
for the quarter.
It's 30% more than they were making last year at the same time. Same quarter last year.
Last year,
It's
wow,
as a year
35% increase.
from year to date. That's what it's called.
Wow.
YTD. So year to date from a year ago, they were 30% more profitable now.
That's crazy.
That's very scary. If that doesn't, not financial advice, but if that doesn't scream recession, then I don't know what else does. Because you know what? A lot of this ties together. Hitting all-time interest rates and banks profiting off of just interest alone is
And
just crazy.
they're also profiting off the war, like they were saying in Ukraine and Israel right now, right? So actually, talking about that, here we go. Diamond warns of most dangerous times as banks report big profits. JP Morgan Chase, Wells Fargo, and Citigroup said that the consumers continue to borrow and spend, but their chiefs warned that geopolitical risks were intensifying. Okay, so we're so interested in spending, right? And we're borrowing and paying high interest rates. And while there's government geopolitical conflicts happening, so Jamie Dimons, which is the CEO of Chase, warned far-reaching impacts from the conflicts in Israel and Ukraine. JP Morgan's chief executive is as close as Wall Street has to a statesman, and on Friday he sounded a major alarm about the global effects of the conflicts in Israel and Gaza. This may be the most dangerous time the world has ever seen in decades, he says. The statements accompanying the bank's quarterly earnings. He warned of far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. Yes, this is very fucking true, you guys. If Iran, right, it's Iraq or Iran, gets involved in the Israel and Gaza, right, conflict, the United States is going to have to intervene because the United States provides military aid to Israel, right? So they will definitely intervene if Iran steps in, because Iran has a formidable military. Then what is that going to mean? That means we get a lot of oil from the Middle East. If all of a sudden we get into a war with one of our suppliers of oil, what do you think our oil price is going to happen in the United States?
Gonna shoot up.
Skyrocket.
Yes. So that is the warned far-reaching impacts of energy, food markets, global trade, and geopolitical relationships. From Mr. Diamond, weighing in on geopolitics isn't new. He consistently warns of dangers from the war in Ukraine and elsewhere. On Friday, he says he was preparing the nation's largest bank for a range of scary outcomes. And guess what? So by the way, when price increases, like because of the gas and oil and food and everything, the companies are not the ones suffering, because they're going to make record profits, because they're just going to keep subcharging. Like they're going to charge so much more and be like, well, there's a war in Iraq right now, or Iran. We're fighting Iran right now. Of course, it is $10 a gallon right now. When in reality, it didn't even go by, their expenses didn't even go up like that much. But anyways, on Friday, he was preparing the nation's largest bank for a range of scary outcomes, with other risks including high inflation and rising interest rates. But on a call with reporters, he described the conflict in Israel and Gaza as the highest and most important thing for the Western world. Otherwise, JP Morgan, other big banks appear to be operating smoothly. JP Morgan's profits rose to $13.2 billion in the third quarter, a 35% rise from the same period last year. Executives, again, so here's the 35% again. Executives at the bank said that the tumult of the regional banking crisis of the spring, which results in JP Morgan taking over First Republic, was steadily fading, right? US consumers and businesses generally remain healthy. Mr. Diamond said, although consumers are spending down their excess cash buffers. Wells Fargo too reported earnings that beat analysts' expectations. Third quarter profit was $5.8 billion, up 61% from last year. Holy shit. But the bank's chief executive, Charles W. Scharf, warned that he was seeing some signs of stress among customers. Yeah, a lot of debt, consumer debt. Mr. Charf cited the impact of slow economy and said borrowers are reducing their loan balances, perhaps good for consumers, but a difficult spot for banks, which make money off lending. Losses on bad debt rose modestly, he said. Citigroup profit rose $3.5 billion in the third quarter, 2% gain from slightly higher than expected. We truly are a bank for all seasons, the bank's executive Jane Fraser said in a statement, adding that each of the bank's 5 core business lines recorded revenue growth compared to a year earlier. Consumers remain quite resilient. Mark Mason, Citi's chief financial officer, payment rates are edging lower and spending was slowing, but only slightly, he said. Customers were still spending and paying down their card balances more steadily than they had in 2019 before the pandemic. The US keeps surprising us with its resilience, he said. He called soft landing for an economy was increasingly likely, he added. So they think that this recession is not going to be that bad. That's what a lot of people are predicting, right? Or these, CEOs. Citi shares price was down less than 1% for the close of trading on Friday. Wells Fargo shares were up 3% and JP Morgan's 1.5%, outpacing the overall market. All of the banks, said Mr. Diamond, are in regular contact with one another about the potential effects of international conflicts. We're all climbing the wall of worry a bit, he said. So yeah, I think a lot of these CEOs, these major CEOs, are getting very worried about what the state of the geopolitical wars is happening, and they understand that is going to be a major impact, and that can spark the decrease in a recession really fast, and it'll be hindering us. That's what my opinion is, because I think I saw a report earlier stating that out of everybody thinking that, like, hey, how bad is it this next 6 months is going to be, this next year is going to be, a lot of people think that it's not going to be that bad, except for CEOs of major corporations think that it's going to be really bad. So that means they know fucking something, like they know something's going on. But that's my opinion. I think we should definitely be focusing on paying down consumer debt as much as possible right now. We need to be saving, do not spend. This is my advice for the American person right now. Save as much money as possible from consumer debt, like pay consumer debt as fast as possible. And for business debt, make sure you're not super over leveraged. Make sure that as soon as if you're going to spend money on business, you're going to see almost an immediate ROI, and try to pay that down at least below 30%. That way you're not over leveraged, you guys. A lot of people want to get business credit cards and they want to max them out, and they don't want to pay it off until like 12 months, and then transfer that debt to another credit card for another 12 months. It's like, no, you want to be focusing on paying down that debt as fast as possible. That way you make sure that right now, because on a recession, that's when businesses close. That's when people lose their business, people lose their homes, because they're too over leveraged. Credit is amazing, you guys, but you guys need to learn how to use it responsible. So, what is your guys' opinion?
Yeah, honestly, don't spend any money that you don't have. To be honest, it's not the time. It's probably not even the year. I know a lot of people, the average American will spend money that they don't have anyways, which is what credit was designed for. The biggest suggestion that I can give is, if you have multiple credit cards, pay off the ones that you owe least, or pay off the ones that have the lowest credit limit to, pay those off first, and then move on to paying off the credit cards that have higher credit limits. Because let's say that you have a credit card limit of $3,000 in another credit card with the credit limit of 10,000, and you are $2,000 in debt. $1,000 in credit card number one, which the credit limit is 3,000, and $1,000 in debt in credit card number two, which is 10,000. One credit card utilization is 33 to 35% utilization, and the other one is only 10%. Make sure you pay off the one where you owe the higher utilization percentage first, and then move on. But you also don't know what the interest rates are for each credit card. Regardless of all, just pay off as much as possible, as soon as possible.
Right. So it depends on what your goal is. If you're trying to get rid of if you're trying to lower the amount of interest rate you're paying, and that's like hey Eddie, my main concern is my monthly payments. Like holy shit, because my interest rate is so high on this one credit card. Okay, then focus on the one that is the highest interest rate, right? Now, if the reason why you say that is because that if your focus is like how can I improve my credit score the fastest, then that method would be the best. Like focusing on where would allocating every single penny would make the biggest credit score increase difference, right?
Correct.
So yeah, focus on the ones that are easier to pay down, because let's say you have both two credit cards that are maxed out. The first credit card that's maxed out is only a $1,000 credit card, so it costs you $1,000 to pay it off, and that would increase your credit score. Versus credit card number two, which is also maxed out, but it's a $10,000 credit card. You bringing that down to be paid off, and that will helping your credit score. It's going to be a lot harder, right? So your dollars will go further in helping you increase your credit score if you pay down the one that is the $1,000 one, right? So that's basically what Mercado is saying, you guys. So depending on what you're trying to achieve, what your goal is, if it's just lowering your monthly payments, then focus on the ones with the highest interest rate. If it's focusing on like, hey, I want to increase my credit score as much as possible because I want to get approved for X, Y, and Z, then focus on the ones where your every single dollar you're gonna get more out of your dollar, right? Per credit for your credit score. So focus on the ones that are easier to bring down to zero first. So Alexis, any insights?
Hot takes.
Any
Hot
hot
takes only. Yeah, so I mean, definitely these times are a little bit worrisome because we have a conflict that's fairly recent, and when it comes to times like these where there's a lot of uncertainty in the air, sometimes most people will say that you want to be a little bit more conservative, start saving up, as Eddie Garcia was saying, start paying off those credit card debts because interest rates that are very high. You want to have as much liquid as you can, but at the same time, now that I think about it, it's also, it's not financial advice, right? Because we're not financial advisors or none of that, but we also want to consider that the last time where we had big amounts of uncertainty was the pandemic. And why I mentioned that is because, of course, a lot of people were playing it safe with their finances and with their health, obviously. So they were being conservative. But at the same time, there were also people that were a little bit more aggressive. They were buying stocks for, it's an example, right? But they were buying stocks for, say, things like Zoom, and if you were to ask people at the time, like, why are you investing so much money into like Zoom, for example, they'd say, you're probably an idiot because, like things were crashing hard at the time, like at the very start of the pandemic. But if you like say you got into Zoom or any of the what do you call it, Pfizer, all these health stocks, etc. Any of those stocks that you got into, you make good amounts of money. So at the same time, like you kind of
GameStop?
want to game stonk. Yeah, there we go.
Right.
And if you were to like invest in these companies, you made a good amount of money. So there's sides to both arguments, to be made, being a little bit conservative, but also being a little bit, a little bit aggressive, but be smart about it, don't just go like all in into something, don't put all your eggs into one basket, as they say.
Well, this is the rule. This is how credit works, you guys. Credit is the most important thing in the economy. Why? Because it allows you to spend more than what you have. Okay, which So the only way for you to produce and make income in the United States is okay. So in the normal economy would be you need to either spend money or spend in material and produce. So you had to like physically produce and then you could sell. However, when in an economy with credit, you're able to borrow money, use that money to be able to produce more a lot faster than you would normally would. So your production would like significantly increase. And this is where we see a credit bubble, right? A bubble of debt because people start borrowing a lot of money, they start producing, and then that expenditure affects the economy in a good way and it brings the economy up. Okay. However, at some point, because you're causing huge inflation, right? Because at the same time, then what you're doing is that eventually it has to slow down and it has to come back down because what credit is you're borrowing against your future self in order to repay that debt because you have to then all of a sudden in the future produce more. You're betting on yourself that you're going to be able to produce more than what you are producing now and bet on yourself. And so then you're supposed to like spend less than what you produce in order to pay back that debt. So credit creates cycles in the economy, and it has to be creating cycles on your spending behaviors. So in 2020, when we started printing a shit ton of money and banks started lending money like crazy, and it all led all the way to like the end of 2021, right? That's when we were spending money like crazy, boom, 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 right into our business, into the economy, into all this stuff. But now, after starting in 2022, and especially now in 2023, we're seeing the pullback, the recession, all-time highest debt. We're slowing down, and now we're leading to the recession. And now we need to stop spending as much money. We need to stop repaying all that debt, and we should have bet on ourselves that we're producing more than we were producing a year or two ago. Okay. So now it's the time to start paying all the debt, start saving cash, because now when the recession happens in the next few months, in a year or two as well, price is going to be at all-time lows. And then you're going to have stockpile all this amount of cash and credit available. And now you're going to be able to buy assets for cheap, for pennies on the dollar. And that's how you take advantage of credit. And that's how you take advantage of cycles and the economy. So with that being said, you guys, this is where we fucking end the video, the podcast. If you enjoy, if you guys like the tips we're giving you, the value we're providing, we do this for free. We don't run ads. We don't promote this shit. So if you guys are finding value, please like this, review it. Please subscribe to our YouTube channel, turn on notifications, and lastly, send this to a friend. Send that to the idiot friend that doesn't know how to use credit, okay? So he can get some smeducated, bro. So get some hot takes, some schmackers, some Sicilian smackers. So with that being said, we love you guys. We'll see you guys next Thursday, 2 p.m. Pacific time. See you.